The forex market is alive. It breathes. It moves. It reacts. And the moment you begin to treat it like a mechanical machine that follows your expectations, it will humble you in ways you never imagined. Understanding market behavior is not just about analyzing charts or reading economic news. It's about developing a relationship with the market. One built on observation, patience, and most importantly, humility. Most traders come into this world thinking they'll conquer the market with one strategy, one system, one setup. But the truth is, the market has a personality. It has moods. It changes. What works today might not work tomorrow. What made you profit last week could take your account down this week. And that's not because the market is against you, it's because the market behaves based on billions of decisions made by participants all around the world. And your job as a trader is not to predict every move. Your job is to understand the behavior of the market and align yourself with it. Market behavior is a reflection of human psychology: fear, greed, uncertainty, overconfidence. Price isn't just a number on a screen. It's a story. It's emotion. Every candle, every spike, every consolidation, it's a message. And the more you learn to read those messages, the more in tune you become with the rhythm of the market. But here's where most traders fail: they try to force the market to fit their expectations. They want the market to behave the way their strategy says it should. And when it doesn't, they panic. They chase. They overtrade. They lose. Not because their strategy is wrong, but because they ignored what the market was trying to say. Think about it: the market isn't random, but it's not predictable either. It moves in probabilities, not certainties. You can have a 70% win rate system, but if you apply it during the wrong market condition, you will lose. The key is adaptability. The key is to recognize when the market is trending, when it's ranging, when it's volatile, and when it's calm. Each of these conditions demands a different approach. And the disciplined, successful trader knows when to engage and when to step aside. It takes time to develop this sensitivity. It comes from experience, from observation, from mistakes. But every time you take a loss, ask yourself, did I respect the market's behavior, or did I try to force my will onto it? That question alone can change the trajectory of your trading career. Let's take a trending market. Everything is moving in one direction: strong, confident, clear. If you understand that behavior, you'll ride the momentum. You'll let your winners run. But an undisciplined trader might cut profits short out of fear, or worse, try to counter-trade the trend and get crushed. The market told them what it was doing. They just didn't listen. Now think about a ranging market sideways, no clear direction. The patient trader waits for confirmations, for rejections at key levels. They know false breakouts are common here. But the emotional trader, they get frustrated. They enter impulsively. They get whipsawed. Again, the market spoke. But they ignored it. The behavior of the market isn't just about charts. It's about flow. It's about energy. It's about knowing when to be aggressive and when to be defensive. Sometimes, the best trade is no trade at all. Sometimes, the market is too chaotic, too uncertain. And walking away isn't weakness, it's wisdom. It's strength. It's the sign of a trader who understands that surviving today is more important than forcing a win. You have to train your mind to think like a market observer. Stop reacting. Start noticing. Start understanding why the price is doing what it's doing. Is there a news event? Is volume drying up? Is a major level being tested? What's the sentiment? What are the big players doing? These questions are far more valuable than simply asking, where is the price going? A truly powerful trader doesn't try to outsmart the market. They flow with it. They anticipate behavior, not direction. They prepare for scenarios, not absolutes. They are ready for the unexpected, because they know the market is full of surprises. But they don't panic because they've studied the behavior, the patterns, the cycles. One of the biggest mistakes traders make is expecting the market to repeat exactly what it did before. Patterns repeat, yes, but never in the same way. Each situation is unique. Each price movement is influenced by a different set of circumstances. Learn the underlying rhythm, not just the surface pattern. That's where the real edge lies. Market behavior also reflects time. The market behaves differently in different sessions: London, New York, Asia, each with its own personality. Volatility rises and falls. Liquidity comes and goes. A trader who respects time, respects behavior. They know that a breakout during London Open has more weight than one during the quiet hours of the night. You must learn to let go of the need to be right. That's not your goal. Your goal is to align with behavior. To flow. To observe. To react with logic, not emotion. The market doesn't reward ego. It rewards awareness. It rewards patience. It rewards those who come to it with respect and humility. And let us not forget, market behavior teaches you about yourself. It reveals your weaknesses, your impatience, your greed, your fear. Every trade becomes a mirror. Every candle reflects your mindset. If you can't handle a sideways market without forcing trades, that's not the market's fault. That's a lack of control. If you close winners too early because you're afraid of losing unrealized profits, that's a mindset issue, not a market problem. Use the market to grow, not just your account, but your discipline, your understanding, your emotional strength. When you observe behavior long enough, you start to anticipate it. You develop instinct. You recognize when the market is trapping traders, when it's creating false hope, when it's luring people into bad decisions. And because you've studied the behavior, you don't fall for it. You rise above it. Trading is not about domination. It's about adaptation. The market is bigger than all of us. It has no loyalty, no memory, no emotion. But it leaves footprints. It leaves clues. If you're watching closely, if you're listening, you'll start to understand. And when that happens, you gain an edge, not because you can control the market, but because you can control yourself in relation to it. Don't fight the market. Don't chase it. Don't resent it. Respect it. Study it. Learn from it. Let it be your teacher. Because every single movement, every fluctuation, has something to teach you if you're paying attention. You'll see the same behavior again and again. Liquidity grabs. Breakout traps. Consolidation before a big move. Market makers playing with emotion. These things don't just happen by chance. They are part of the design. And once you understand the design, you stop being the victim of it. You start positioning yourself with it. It won't happen overnight. This kind of awareness takes time. It takes losses. It takes frustration. But if you commit to learning the market's behavior, truly learning it, you'll find that your trading transforms. You'll stop overtrading. You'll stop panicking. You'll trade with confidence, with flow, with purpose. This journey is not about finding the Holy Grail. It's about becoming a trader who can see clearly, who can feel the pulse of the market, who doesn't need to know what will happen next, because they're prepared for whatever does. So observe the market. Study it. Journal it. Watch how it reacts around news, around key levels, around time of day. Build your library of experience. And slowly, you'll start to recognize behavior before it even unfolds. That's when trading becomes powerful. That's when you gain the edge that can't be bought or borrowed, the edge of understanding.